What's up, y'all? It's Evan. Today is lesson 10. It's the second lesson of our technical analysis breakdown unit. We've already established our fundamentals, our foundations to our house. Yesterday we covered our supports and resistances. Again, supports and resistances must be drawn in every single chart. It's your foundation. Today we're going to cover trend lines. We have 5 big points I want to hit on. First, the limitations of supports and resistances. Trend lines are crucial because they're going to be diagonal, they're going to connect bottom to bottom, top to top, and they're going to show you how sometimes when previous lows and previous highs get broken and now you have all-time highs and all-time lows on the chart that you chose, sometimes supports resistances are not going to be useful. Secondly, we're going to look at how to properly draw a trend line. There are a lot of people who draw them differently. I'll show you how I go through my process of finding them. Of course, they should be fairly evident to you. Just like supports, they must be evident. But I'll show you how I properly draw them and how they are used to my advantage. Third, can they cut through stuff? A big topic of conversation with trend lines. Can they cut through things? The answer is yes, but not all the time should they be considered strong. So we're going to cover how that works, how I can use that to my advantage. Fourth, how to properly adjust them. As times change, as charts change, you must be ready to change the trend lines and be very dynamic with this, and I'll show you some really good tips for that. And then lastly, I have 2 patterns I want to show you real quick. There's a whole pattern section we're going to get into, but for this particular lesson, there's 2. I want to show you how trend lines are very, very powerful for them. With no further ado, let's get into it. So let's start off extremely simple and just find some trend lines. Again, I can go through this whole lesson and find 10, 15, 20 in here. We're on the 180-day chart. We're trying to find the best value. You have a 9-to-5 job, you're a beginner. Tracking 15, 20 trends in the same chart is stupid. What I need you to do is find the best support and the best resistance trend lines. For RRC, let's just find the best support trend line. Let's start off, as always, as a ritual, we do supports and resistances. Again, this is one, but it's far down there. I want 3 hits. Obviously, that's going to be 1. Once, twice, 3, 4, 5 times. Again, this is 1. You could move this up if you want to. I'll keep it here for now. This is definitely an area of support and resistance right there. This is definitely 1, but it's really, really close. So we're going to move up just a little bit and be more in this area. Is a really good one. That's a really good one. That's a really good one. So again, you always start off making your channels of success, making your supports and resistances. For this lesson, I'm just going to take these off so we can see the trend line. Again, the principles of a trend line are exactly the same as a support and a resistance. The only difference is that it's going to be diagonal. So again, you want to have the same exact idea of it hitting 3 times. It's very strong and evident. All those things just applied to a diagonal line. So what you can do to start your trend lines, some folks like to start from the newest price action over here and then work their way across. I find what's most successful to me, because we're in a green market and I want to be bullish, the charts that I find, and we have a whole scanning section, don't worry, all the charts that we find should already be ascending in some way, shape, or form, or horizontal. So I usually start at the most lowest point to the left. So here we go, over here. I'm going to put my dot. I'm going to go all the way to the right. Give me a full line. I'm going to come up here, and where it taps, I'm going to place it. Now again, does this work? No, it's not really a good trend line. So I'll get rid of it and try it again. Come over here, go full line, go all the way up, and then try and hit the next thing. Oh, right there. Does that look good? Yeah, it looks good to me. Just like with your support areas, is it going to be perfect? No. They're never going to be perfect. Sometimes they're perfect, but 9 out of 10 times they're not going to be perfect. You need to weigh your risk versus reward, and again, be like, it breaks it for a day or 2. I'm fine with that. I got 4 or 5 extra moves out of it. I'm going to take it. But again, do not force it. If it's not evident, don't put it there. RRC is definitely noticeable for me. It has a little wick that breaks it, a little wick that breaks it. That's quite all right. Looking at this, we would have missed this move though. So again, right click, redraw as a channel, just like with our supports and resistances. We're going to make this gold for our load-in zone. This is where we're loading. This is our golden channel. As you can see, we've gotten once, twice, 3 times, 4 times. 4 great moves out of this play. Again, you could have said, well, why don't we buy in over here? This is a great area of value too. Of course it is. That's for a different episode. This is a very basic trend line one. So again, 4 really good buying areas. And again, just like yesterday, the higher up you buy in, the more risky it's going to be. But again, the more likely you're going to miss the move if it really goes quick in there. But again, the lower in the channel these plays get, the lower in the channel this price action gets, right? The less risky it is because your stop loss will be beneath this. We'll talk about that. But again, the less likely you're going to miss it because you can put a limit buy order right above all of it. So it comes in, around $5 here. Put a limit buy order at like 505. It keeps going down, keeps going down. You don't have to worry about it. You're watching it and then it takes off. You get the whole move. So the farther in it gets, the better for you. But again, I've definitely been on high alert as soon as my line gets crossed. I'd set an alert maybe like at 6:39 right here. Price action, bing, bing, bing. I hear it. I can check it out. I can then watch it. It breaks into the channel. I'm on high alert to buy. I see it starts reversing. I buy in. So again, that's the beauty of trend lines. They're just supports and resistances, but they're diagonal. Let's check the next one. Again, anyone can notice that cat's been ascending, but not everybody can place proper trend lines. Again, let's start off with their support and resistances. That's definitely going to be one. This is definitely one. That's definitely one. And again, this is quite a few. But again, just to be very clear, that's definitely going to be one. This area is one. Scroll up. That's going to be one. I can even follow the whole price action. That's one. And that's one. So that's all your supports and resistances. Here's another cool thing you could do. These really nice ascensions that are super clean, I call them staircases. What I'm going to do is take my trendline tool and right where that peak is, I'm going to click it, extend right, and I'm going to make a staircase, literally. Let me show you. So here are all your lines. If I get rid of these real quick, they're very valid, but let's do this again with our trendline tool. We'll go right here to the peak, click down, left click. Make sure it's 0.0. Anyone who does this knows it's kind of hard. Extend to the right. We're going to come right here, extend to the right, come over here, extend to the right, come over here. This is a good one to write about. I'll go right here. Extend to the right, go all the way through. And you see if we go from every peak over, you see we're developing, we're making an actual staircase. And again, this is not for every single ascension. It doesn't work for everything all the time. But again, if you do it like this, look at that. You see this? Step, 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 step. So again, you can see how strong supports and resistances are even without trend lines. You could not even use a single trend line. You could have made money just off of this, right? If it makes a staircase pattern like this, it's a great sign. It's a stock that has really good strength. So again, that looks really, really good. Let's delete them for now while I make our trend lines. That's totally cool. Again, you should have these on here if you're going to play this. But again, just for clarity, let's just do the trend line. So for a stock like this, it looks really, really good. Again, you can start up here. You want to start at this price action right here and work your way through. You can. I always start at the bottom left. So I'm going to start at this little node. If it doesn't work out, go to this node. Doesn't work out, go to that node. Go to this one. Right? I just move my way up and try and find the best trend line. Go to the bottom of this wick, all the way over, come up. What do I see? Well, I got one. If I go up a little bit higher, like right about there, I got 4. Looks really, really good. I like that. Here's our issue though. It may look really good at first, but again, I insist you do 2 or 3 trend lines and really try and find the best value. Sometimes it may, that's a really good bottom one, but again, how relevant is it? Looking at price action, you have all of this and all of this that's no longer in play, right? Just because it works doesn't mean that it's the best at all. This is going to work just fine. You do put this trend line like that. But again, I'm missing all this move, right? And again, you'd be like, well, I'm going to make a channel and just capture all that. This channel is 5%. Your risk should never be over or even near 5%. It can be, but again, that's too long. And here's the other issue. The time you're holding this right here is almost 16 days waiting for a reversal. 16 days. So again, I don't think it's the perfect place. It may look good. It may be a really good bottom of it all. But again, this line may work well, but it's not the best. So let's move up to the next node. Come all the way over. Come on up. As we can see, even from that, we have quite a lot of good price action off of this trend line. It looks really, really good. But again, we're missing all the relevance. So let's do the same exact thing. Let's move it up a little bit. Okay, that looks really, really good. I like it right there. You have all this price action, and again, you can see it does break, so it needs to be brought into your consideration. But by doing this, we'd probably buy in closer to here, make about 4 or 5%. It starts to drop off, you could sell, and then rebuy in. But again, you're holding it much shorter, only 7 days compared to 16, just by moving it up. Again, if you're more risk adverse, always make a channel. Put your channel at the bottom like this, that's fine. Me personally, I'd make it a little bit higher and go off of that. And again, as of currently, this price action is not really coming down, so I wouldn't buy into it. But again, for this whole entire chart right here, it looks really, really good. What you can also do is you can then redraw the channel and go about halfway up. See that? Go about halfway up, and then treat this like two different channels. Just like you would with support and resistances, you can treat it like two different channels, just like that, and it looks really, really good. Real basic stuff. And again, for this particular lesson, just keep the one trend line with the channel, but again, really clear. And again, you must retry things multiple times to make it really fit. Let's check the next one. Next is ALSN. Let's step it up a notch a little bit. Okay, so we can go with our supports and resistances. As always, that's a good place for a support right there. Then again, this is relevant, but not to the current price action. Scroll up just a little bit. That's relevant as of now. This is relevant. That's relevant, and that's relevant. Again, a lot of really good 100% channels. And again, we could put one here. Okay, you know, it's whatever you want to do. Really good channels. For this in particular, let's just go with a trend line, and you keep the supports off just so it's not so muddied up. So we're looking for an ascension. We're always trying to go long when the market is green. The market is green, so we're trying to go long. Is anything over here relevant? Not really. You can try and connect things, but again, you're not an idiot. You can see that we have current price action going up. This is our bread and butter over here. Go at the bottom, come all the way over, come up and see, all right, we're almost there. I'm going to move it up just a little bit, right about there. As you can see, it wicks down, so it's not perfect, but again, just like supports and resistances, they never are. Make it into a channel, an area of value, you know, going right about there. As you can see, we would have captured this move then. We would have been able to see it coming, been on high alert, and bought in after this pullback. Really good stuff. It's only a channel of 1.5%. Good size, right? We're not risking too much more. Make it golden. Now we have our launch pad, right? The higher up in the channel, the more risk. The longer you can wait to get lower, the better. But again, you have to pull the trigger eventually. If you want to be like, I'm going to wait a little bit over here and takes off, well, you missed it. But again, really good trend line. Let's add a resistance trend line. Before I move any further, this needs to be clarified. Something that's never talked about, never ever into my microphone, that's never talked about is that a pattern, like an ascending triangle, a channel, a wedge, a channel, and then two trend lines, resistance and support, they have to come from the same move. One more time. As I'm taking my time so you can really hear this. This is extremely important. It's never talked about. A pattern, like a wedge, a triangle, a channel, comma, channels, and then a support and resistance trend line must come from the same move. It must be the same swing. It must be the same move. Let me show you in a second. Reflect for a second. Must be from the same move. Got it. I'll show you. Again, you're going to have the issue that folks are going to be like, well, this is definitely a line here, and then over here, you can see how it lines up great. No, that's not how this works. Again, you could consider this one move, but that takes over 4 months, so it doesn't count. It must be the same move. Let me show you. If we're going to buy in right here, that's going to be our buy-in zone. That's the bottom of our trend line. The other trend line must be here or here. This is one move. That's one swing down. That's one swing low. This is one swing high. It must be from the same move. It must be the same move is where both trend lines come out of. If we were to do this chart again, and you want to start with your bearish line, and you want to start here, the trend line you draw afterwards must come from here or must come from here. It must be from the same move. It has to be critical to you that you follow this. Again, this applies to patterns, channels, trend lines. If you have a resistance or support, that doesn't apply. If you have an ascending triangle, which we're going to talk about in this class, that's a straight line over 5 or 6 months, that does not apply to this. I'm saying if you're making a channel, a pattern, or a trend line out of one move, it must be from the bottom of that move to the top of that move. If you start moving it 4 or 5 weeks or different nodes over, it's not going to work. It must be the same exact move to be critically important to your technical analysis. You may get pissed off because I'm making you have these rules, but again, when you find setups like this, it works out 10 times more effectively because you front load your work. I'll show you. So we've established this is going to be our trend line area. I like it right about here. Always extend right. Redraws the channel right about there. Again, looks really good. Make sure it gets that move right there. Looks really good. I want to put a resistance trend line. It must come from right here or it must come from right here. Now, if I drew a resistance line straight across right here, which is also relevant to the stock right here, that doesn't count, right? This can be always relevant no matter where it is. That's fine. If I'm going to draw a new trend line that's not a straight line, it has to come from here or here. Now, again, it could come from here. Okay, this is still, these are both really close, so I'm going to consider both of them. But again, it must be the same move. I can come over here. We're going to go from top to top, all the way over and come on down. As you can see, once, twice, 3 times. Looks really good. And again, if you're more about risk, do the same exact move and shave some off, right? You can come down a little bit farther and see that all of these are relatively close. Is it perfect? No, but again, it looks really good. I would suggest you draw either the same color as your trend line, or I usually use orange, just a preference. If you like to, if you want to have kind of the same principle with your loading zone, have an unloading zone, right? Come up here. When it taps the first line, you can then get ready to sell, and it kind of backs out. You can then try and get as much of the move as possible and sell. I usually don't use resistance trend line channels. I only use those for my loading zones. But again, a great thing, if you want to use it, you can then make your area for your resistance. My issue is just with the amount of lines that I do use, as we're going to get into this. Throwing more in there kind of gets complex. You can do this as you get closer to the time to sell, but just to keep it on there, might get a little bit kind of confusing. But if you really like the idea, please use it. It's a great idea. So as you can see, the same move made this wedge. You could also come over here and see that this wedge from right here is very similar to this one. It must be from the same move. Let's check the next one. So here's W day. Of course, you should do your supports and resistances. I'm not going to, just because we're doing trend lines, and that's quite all right. So we're going to come down here and see we have a nice ascension, right? 149 to 239. It's definitely going up. The market is long. We start with our supports. You can start right here if you choose. But again, I think if you start on the top right and try and find your connections down here, you're going to be a little bit more biased than starting at the bottom left and moving up. Another note, again, obvious, but again, just to make sure it's said, you can start from any one of these wicks down here. But again, if you start over here, you're already starting off cutting through price action. So again, you can start down here if you want to, but again, you're going to get stopped right here. So I would prefer you starting from the most, easterly node at the bottom and at the bottom of that one. So right about there is probably a good call. So click all the way over to the right. Let's scroll up and see what we got. We have our first hits right about here. Again, is that on purpose? Yeah, it's a really good stock. So you have it right there. Extend to the right. Make it into a channel. Again, it must not be that much percentage. Don't go crazy. Don't be like over here like, oh, it's a good channel. Make sure it makes sense. I'm going to go right there. And again, that looks pretty wide. It's only 3%, so it's not too big. The reason I made it that wide was I want to connect this move, and then this move. So 4 good moves. Again, if you're curious how you capture more moves in here, that's another lesson. Looks really, really good. Where can I put my resistances? It must be from this move here, right there, or right there. They must be connected. You're thinking, well, that doesn't make any sense. So what do? I'll tell you. Trend lines can cut through price action under 2 circumstances that you understand. Firstly, if you're going to cut through price action with a trend line, it must hit more than 4 times. I want 4, 5, or 6 at least. They must be very clear. We're not forcing anything. If it's not there, It's not there. But if it is there, place it. And then secondly, it's not as strong as a pure one. So if one cuts through 4 or 5 price action lines to make it look really nice, sure, it's relevant, but it's not as relevant as a pure trend line. So 4 or 5 hits at least, and again, it's not as strong. So again, coming over here is kind of worthless. It's really low. This peak over here, all the way to the right, and let's come down. As you can see, we come right through here. Well, look at that. They cut through this, but you have once, I guess technically twice. So we have once, twice, 3, 4, 5, 6 times. This is definitely a relevant line. Now, should I take it as much or take it seriously as our loading zone? No, this is definitely much more important. We're going long, but when it comes to selling, you should be in high alert that maybe it's going to break above it. Maybe it's going to break above it, as you can see, but again, don't hold your breath. So yes, the answer is you can cut through price action, but it's not as strong, and you better have 3 or 4 or 5 really good hits to do it. Let's check the next one. Next is AEYE. Again, always draw your supports and resistances. They're very clear. Again, we're doing trend lines, so we're going to skip it. Again, come down the bottom left, all the way right, drag it up. What do we see? We're already hitting our first one, but again, go up a little bit higher and see we have a good 3 or 4 right about here. It looks really, really good. I like it a lot. We can also see, can we actually draw any kind of resistances? Not really. You can see maybe if you want to consider this one move, okay, this is pushing it. You can connect these and see they do cut across, and that was a resistance. But again, that's really pushing it. What I want to show you is that sometimes trend lines are going to break. The main idea is that your trend lines will become more irrelevant or stop when a very significant support or resistance are broken. Seeing as it's a green market, mostly when a very strong resistance is broken, the previous trend lines are not nearly as relevant as they were beforehand. Let me show you. So here's AEYE. Let's make it a gold channel. We got to be very consistent, very purposeful. That would have been my line right there. A lot of great price action, really good. Looking at this, where is the strong resistance at? Well, it's fairly obvious, right? You come up here, this whole entire area right here, you can see a very strong resistance. For 4 months, it couldn't break above it. As soon as it broke that resistance, what happened? This trend line is no longer relevant, right? As soon as this happens, and a strong resistance is broken, or a strong support is broken, trend lines need to be reset. So if I was going to go forward with this stock, I would keep it here. But again, knowing that this happened, you could delete it, but at the same time, the principle remains the same. When a strong support or resistance is broken, trend lines must be reset. I'll show you another example. This is band, B-A-N-D. As we can see, we have a very strong support and resistance line in this area. Let's track our trends. Before, you would have been over here watching this trend up. Very obvious, isn't it? Very, very obvious trend up right here. Very obvious trend up right here. You would have been playing it, would have been excited to buy in. You would have had your channel of value, really good to go. As you can see, trend up, trend up, trend up, looking really good. Hits a strong resistance. Once, twice, 3 times, 4 times, can't break it. Finally broke it. Boom. Strong support or strong resistance is now broken. It's now going to be a strong support. It comes back down and tested, and what happens? It breaks it. Now that this strong support has been broken, this trend line is no longer relevant, right? Because this trend is now done. What would you do? Delete it, like I said, and now you can let it play out. As you can see, we have a previous support area right here. This is the power of drawing supports and resistances first. As we can see, you would have had a very good support area that would have bounced off to, and you would have seen some life, so you would have gone back to the drawing board over here, come over and said, hey, is this going to be a new support area, a new trend line? Possibly. So you would have let it play itself out, would have bounced again, and I would have said, okay, we have a good area of support. It looks really, really good. You would start redrawing some trend lines. As you can see, these lined up perfectly, right? So when a support or resistance is broken, a strong one, trends will reset themselves. And again, that's why we do this first the right time. You have your supports ready, your trend lines ready. If something breaks, get rid of the trend line and wait for a new one, then you can buy in. But again, building this relationship with your stocks and the ones that you like a lot are very, very critical to success. So again, always put supports, always put resistances, and again, trend lines reset when a strong support or resistance is broken. One last one for you, a really good example of how this happens again. Let's do our supports and our resistances. So we're going to start with our supports, come down, see, all right, maybe this area is one. I'll say probably right about here is our first real support and resistance right there. Scroll up, this is definitely one right about here. And again, these are price level bottom. I'm using the trend line just for now. This is definitely a support area right here. Extend right. And the very strong resistance is right here. As you can see, we haven't broken above it yet. It's been a hot minute, and we have not gone above it at all. So, going up, 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 we can see an obvious trend line. It's developed, right? We go right about here and say, all right, this is definitely our trend line. Extend right, make it a channel. Probably right about there. Capture as many moves as possible. It looks really, really good. Love it. So we're playing this, we're playing this, we're playing this. We buy in, and guess what? Oh, we've broken that strong resistance. Now we kind of go through the whole entire price action. You can see how unrelevant this trend line is as it keeps going up, right? So what you would do is you would delete it. Not really relevant. You can see we broke the price action right here. So I would argue, let's see what happens. It starts playing its way out. You go to this move right here, come on over, and you can see 1, 2, 3, 4. And again, we caught this move on my channel if you would have watched it. We said this is definitely developing into a new channel. So as you can see, when previous resistances get broken, strong ones, new trends develop. Very key for you. So before I share those two patterns with you, let's review real quick. First, a trend line is just like a support or resistance, but it's going to be diagonal. Yes, you must have 3 taps for it to be a really good one. If it cuts through price action, which it can, and you need to have 4 or 5 really, really good ones. And then lastly, you must adjust them as time goes on. As a strong resistance or a strong support is broken, you must adjust your trend lines, and that means possibly deleting them in a few weeks or months afterwards and then redrawing them for a new one. So again, those are very critical to understand. Let's check some patterns I want you to see. So EBR is a great stock. It's really good for a channel play. It also was, though, showing a pattern a few days ago that recently broke, and I want to share it with you. A broadening top is one that you must know. It's going to be very critical for you. A lot of people call it a wedging out as well. EBR just had this, and it was a textbook play. You could have shorted, but also you could have also avoided. I'll show you. So what's relevant to this stock, again, you could do your supports and resistances, but again, this is what I've been watching. We had a very clear pattern up, right? We had a very clear support area. I mean, what more could you ask for, right? This looks really, really good. Redraws a channel. I mean, that's perfect. Looks really, really good. Again, this is where folks get messed up. You must draw the resistance trend line from the same move. My first thoughts here, which means I can use this or I could use this. And this is what's important. I could have gone over here and tapped it twice. And again, is that relevant? Yes, but I want 3 taps. So that's not as relevant. What is relevant is over here. We had 1, 2, 3 taps. You see that? Once, twice, 3 times. Extend that a little bit farther. Extend this. As you can see, this was a textbook broadening top. A wedge out, if you will. This is a clear sign that it's going to die on you. What happened is this. Oh, bump, 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 as you can see. So that's one pattern you must know. I'm just bringing it up now while you do your research. If you have 1, 2, 3, 1, 2, 3, and if that resistance line is more extreme and far out than the support pattern, that's a broadening top or a wedging out. That is a bearish setup. Avoid these. And again, you could have been saying, well, it's a ascending triangle. As you can see, nope, nope, nope. Must be from the same move. This was definitely a wedge out or a broadening out. It's bearish. I don't like it. The second is similar, but a little bit different. It's called a bump and run. So this stock is LPG. It's one we've been watching. As you can see, obvious supports and resistances. You can see, again, clearly when this strong resistance right here was broken, new trends began. So again, you can see this breaks. So let's watch this new trend. Let's come over here. A bump and run is when you have a really clear ascension, a very strict high ascension, as you can see. We'll put it right about there. That's a very clear ascension, right? That's a very clear trend line of where strength is. It's bouncing off of this. A bump and run happens when you have a ascension like this and it gets even more extreme. What you're going to do is take the trend lines that also line up with this extreme and line these up. So as you can see, we have two lines. And again, this is a little bit more complex, but you got to recognize this. And I'll break it down simply in a minute. So you have two trend lines just like this. As you can see, they got so overexhausted from getting this huge pump. We knew it was going to pull back. You need to make sure you cut your losses if it breaks this line. The reason is it gets so extended, volume gets sold off, and then you have a bunch of stop losses get hit, and it really drops down. As you can see, it gets really, really high. We have this gigantic run up. See this right there? Run up, and it breaks down. So again, if you have an ascension with a huge push up, that's called a bump and run. So again, it's a very easy concept. You draw your ascension line just like this. If out of that another big green push comes up, draw a second ascension line. If that second line gets broken, you sell. It's not going to live. I'll show you another one. I'll put this nice graph on the screen. All you need to see is that you have a prevailing trend up, right? A really easy one. It gets really highly overextended with a bump, and it always comes back down to your trend line, where then again, it could act as a support or a resistance. The main idea with the bump and run is that if it gets too overextended, do not get greedy, right? You want to have it be on your trend line, make some good gains, and get out. The broadening top is also very similar. You have some higher highs and all that kind of good stuff, but if the lines make like almost like a microphone or a megaphone and the resistances are going too far up, it's not going to last forever. So again, you have really bullish setups, but again, you must be on the lookout for these bearish patterns forming. And there you have it. What we covered today was that trend lines act as supports and resistances. They're just not horizontal. They can cut through price action, but if they do that, they're not as powerful, and you must be on the lookout. If the price action drops below or above it, they're going to switch from a support to resistance or a resistance to a support. Trend lines must be dynamic. You must be ready to adjust them. If they do not work out for you, if it's wrong, erase it and start over. Most trend lines that were drawn correctly become more irrelevant when a strong support or resistance is broken. On top of that, do some research. We have a whole lesson coming up on patterns, but your bullish setups can form into a bearish pattern. And you must be aware of that. The two most common is going to be a broadening top. It looks almost like a megaphone. If that happens, get your money and get out. Or it's going to be a bump and run where you're ascending too quickly, it bumps, and then it's going to come collapsing down on top of you. With that being said, have a good rest of your day. We'll be here for your next lesson. Lesson 11 is up next.